Hello, and this time on the Mortgage and Protection Podcast, we have Paul here from Henchurch Lane to explain your mortgage options if you are self-employed or if you are a self-employed construction worker, should I say. It's great to chat with you, Paul. How's it all going?
Very good, thank you. Very good. A little bit
Good.
rushed around last minute due to
Oh,
technology issues as normal, but we're here now, so we're all good.
we are. It's always the way, isn't it? It wouldn't be the same if not. So let's get straight into the questions that we've got here then. So first of all, what challenges do self-employed construction workers face when applying for a mortgage?
Okay, so what I would say is the main challenge that we come across with our clients is actually just them proving their income. So if we compare that with someone maybe that's PAYE who just hands over pay slips, the difference is self-employed workers need to show lenders a quite a consistent earning through things like accounts and tax returns.
Mm.
It's not harder, I would say, it's just more paperwork. So it's a little bit more long-winded, which normally then, as a result of having to provide that evidence, normally makes it difficult from an affordability perspective. So
Mm.
that's what we tend to find is the difference, the main difference between people that are employed and self-employed. It's around income and affordability.
Right, okay. So that's the key pointer there then to take away from the episode. Speaking of paperwork, we know that preparation is key here. So what documents are required for a mortgage if I'm self-employed in construction?
Okay, so self-employed people, I would usually say mainly the two things that you're going to need are your SA 302s, which are your tax calculations
Mm.
that come hand in hand with your tax year overview documents. Um, but you're also going to need things like business accounts and limited company accounts if you are trading through a limited company as well. And the reason for that is because the lenders, like I say, looking for that income to be stable and consistent.
Mm.
However, with construction, there is a slightly different method that people can take, and it kind of bridges the gap, I would say, between employment and self-employment. If it
Right.
is CIS and you are in the construction industry scheme, then actually you can provide pay slips, and a few lenders will look at you more like an employed person than a self-employed person. So a lot of the answers that I give you today are almost going to be twofold because of that little nuance within the industry.
Right, okay. So something to bear in mind there, but all you need to know about documents. Okay, so just to confirm here, how many years of accounts or tax returns do I need? Can I get a mortgage if I've been self-employed for less than a year? That's always a popular question, isn't it?
Is, yeah, and
Mm.
normally the answer would be that most lenders need 2 or 3 years.
Mm.
Some will consider 1 year. If you're trading for less than a year as a self-employed person, forget it. However, because this is coming with that construction industry scheme sort of bolted onto this conversation,
Mm.
then actually you can obtain a mortgage within that scheme as if you've got 3 months worth of pay slips, subject to you having a track record within that industry. So let's say you've been a chippy for 2 years, but you've been in the CIS, the construction industry scheme, for 3 months. And in that instance, actually, you could apply for a mortgage with those pay slips as long as that scheme is deducting your tax from your pay slip. So they effectively are paying your tax for you,
Mm.
which is, like I say, almost employed.
Right, okay. So that explains that there. And now I want to take a trip to the chippy. Now you've said that. There we go.
Sorry.
Let's move on then. So, do I need to be registered as a sole trader or a limited company? Is it easier to get a mortgage as a limited company director or sole trader?
So either works fine. Lenders don't mind if you're a sole trader or running your business through a limited company. The process is slightly different, I would say. And sole traders are going to be assessed on their profit, and directors are either going to be assessed on the company's net profit or their salary and their dividends added together. So that's
Right.
how they would calculate the affordability. If you are CIS, again touching on the construction industry scheme,
Hmm.
then it wouldn't matter. Sorry, I've got a gnat flying around me. Um, then it wouldn't matter if you're doing that via a sole trader or through a limited company business. If you've got those 3 months worth of pay slips, then we could secure your mortgage in from either direction, basically.
Right, okay. So there we go. That answers that one. Hopefully that's clear. Some of these questions might cross over, they might cross relate, but we
Yeah.
do like to read them all out, don't we? That's what I'm trying to
Absolutely.
say there. So, how do lenders calculate income for self-employed construction workers then? Anything else to add around here?
Okay, so like I mentioned, if you're a sole trader, then they're going to look at your net profit. If you're a director, then they can look at the net profit from the limited company, or they can take the dividends plus the salary route. So they're the sort of three different ways. With this, we're adding in a fourth, which is the CIS
Mm,
scheme. So if you've got 3 months worth of pay slips, normally what lenders would look to do is add up the last three pay slips, divide it by three to get an average month, multiply that by 12 to give you an average year. And then they're likely to take probably 46 or 48 weeks of that, roughly, depending on what lender,
mm,
because obviously you're going to have some amount of holiday within that, right? So
yeah.
that's how they'll sort of annualize your income if you go down the CIS route. Um, yeah, hopefully that answers that. Very
Yeah.
complex when you get to the sort of CIS level. Could be limited, could be sole trader, could be CIS, could be profits, could be
Mm.
salary, could be dividends. There's a lot going on.
Okay, yes, it sounds that way. I'm glad you did the figures there, the maths. Let's follow on with this question then. Again, it leads on. So, can I use retained profits or dividends as income?
Dividends, yes, no problem. And retained profits can sometimes be used, but only with certain lenders. And now I would say that you're probably looking at less than being able to count them on one hand.
Right.
But that's where I would definitely recommend if you're looking at anything like that, instructing a broker that knows a lot about self-employed construction industry and
Mm,
those particular types of self-employment, because in some instances, if they're looking to throw retained profit at the calculation to increase their affordability, it wouldn't be uncommon to be able to borrow more with a lender that doesn't factor that in, that has a higher multiple. So,
right.
yeah, you can get pigeonholed when looking at things like that. So, definitely make sure you've employed someone with a bit of knowledge there.
Okay, so something to bear in mind there. Now we're getting through these questions. Let's move on to this one. Will irregular income or seasonal work affect my mortgage application?
Yeah, it can. So lenders like steady earnings, obviously. If your
Mm,
income is jumping around, then they're likely to sort of take the average approach. So it certainly helps if you've got a consistent income. That being said, if you are construction industry, and let's say that you're in, I don't know, let's say the plumbing sector, you might well see yourself earning a lot more money in the winter months than you would in the summer months.
mm,
So in that instance, if you do take that sort of 3 month CIS construction industry approach and just average out your latest 3 months, that could be a lot less in the summer months than it would be in the winter months. So
mm.
again, because there are different avenues that you can take with this sort of income, it's worth speaking to someone to calculate and crunch the numbers across the board to see which is the best suited one for you at that moment in time,
Mm.
whether it be at high season or low season.
Okay, so makes sense there. Again, something to bear in mind. I know I keep saying it, but these are the key pointers. So this next question, it's always a popular one, but in this case, how much can I borrow as a self-employed construction worker?
How much can you borrow? That is a common question, isn't it?
It is.
To give people what they want. They want an answer here. It's
Mm,
usually around 4 or 5 times your annual income,
yeah.
just like anybody else. Whether it be employed, self-employed. The exact figure is going to depend on what lender you approach. It's going to depend on your credit history, sorry, and it's also going to depend on what the situation is with your financial commitments in the background.
Mm,
Every lender will offer you a different amount. So the best thing to do is look at a whole of market affordability and see who gives you the most generous option. If that gets you where you need to be, then that's great. If it doesn't, then effectively you need to look at how your income needs to change over the coming years to
mm.
achieve your affordability goals.
Right. Okay, there we go. So we have three questions left for this episode. Now, what if my most recent year's income is lower than the previous year's?
Okay, that can be tricky. Um, some lenders are going to be very likely to take the lowest year. So if you are
Mm,
trending downwards, they're likely to take the lower of the two, rather than averaging it out if it went the other way, which is obviously what you want to happen. But look, in the
mm,
self-employed game, it's not uncommon for your income to be up and down year to year. So it is what it is. You work with what you've got. Don't forget, you've always got the option to, you know, a lot of the times, some people, for argument's sakes, now
Mm,
could submit their accounts from April 24 to April 25, and most of them haven't. So there are
right.
ways and means in which you can look at your administrative side of your business and look and speak to the accountant and say to them, what options do we have here to get us back on track on that upward trend? But
Mm.
if it is on a downward trend, you have submitted your most recent set of accounts, they're likely to take your most recent year for that.
Right, okay. Well, actually, that's sort of a top tip there from you, I think,
There you
Paul. So
go.
hopefully that's
You're
useful.
welcome.
There we go. I will just reference as well, we're recording this episode in September 2025. I always think it's good to reference that just
Yes, thank
for the
you.
listeners or watchers. Yeah, there we go. So let's end on these two questions. They tie in with each other. So, which mortgage lenders accept self employed construction workers? And are there specialist lenders or brokers for self employed mortgages?
Okay, so if you're looking at this at the sole trader approach or at the limited company approach, then if you're construction and you're within that tax wrapper, most lenders will look to offer your mortgage. If you're looking at it on the CIS basis that I mentioned, which is where you would use your latest three payslips, they would view you more towards the employed sort of heading.
Mm,
Then there are a very few amounts of lenders that would do that, and likewise, there are a few brokers that would know the lenders to go to on that as well. So to
mm.
answer your question, are there specialist brokers in this sector? Absolutely, yes. Henchurch Lane, name drop, are definitely one as well. But it depends on what approach you're going down. If you choose the wider, broader approach and that works, great. That means you're going to get access to all of the rates. If you're
Mm.
looking at that CIS route, which could well be the best option for you, then you might well be, let's say, with a fewer pool of lenders to work with.
Right, okay. And we gave you that shameless plug there, didn't we, really, Paul?
Sorry,
No, it's a
couldn't
good
help
time to
myself.
drop it in. Great segue. Now, we will actually be back with a part two. There are more questions to cover, but they're all the main ones for our part one episode. Have you got anything else you'd like to add, or shall we catch you on the part two episode?
What I would say is worth adding at this stage is
Mm,
we've been having discussions in the office actually about the construction industry scheme, which is very heavily sort of driven towards the questions today.
mm,
And
yeah.
some lenders have recently been making some quite big changes in the background. Now, as a broker and someone who's sort of seen changes come in and be implemented over the years,
Mm,
I am just going to throw it out there, and it's September 2025, as you mentioned, Tessa, that
yes.
it might not necessarily always be something that's going to be available on a CIS basis where you can sort of bridge this gap and almost have your cake and eat it
Mm,
from a tax perspective and a mortgage borrowing perspective. And that's become quite clear to lenders, I think.
right.
And it's become more and more restrictive as we're moving forward. So if it is something that you're looking to do and you're maybe potentially putting it off, I would say it might be worthwhile prioritizing that sooner rather than later, because these things that are effectively too good to be true, in my
Mm,
opinion, they're not around forever. So I'll probably just
right.
finish it with that, let's say, little crystal ball prediction from Paul
Yeah.
Holland at Henchurch.
Okay, well, brilliant. Thank you for that. Yeah, something to consider. And yes, of course, all the information is correct at the time of recording. Paul,
Yes,
thank you for that. And we'll be back with more
very
questions,
welcome.
won't we? So we'll see you on that
Yes,
episode.
I look forward to it. Thank you, Tessa.
Take care. Bye bye.
Bye bye.